All right, today we are digging into a really fascinating business story. It's all about a company called Laurus Labs and its incredible transformation. Seriously, it's a perfect example of a long-term bet, a huge strategic pivot, and a payoff that was literally years in the making.
So let's just start with this number, 882.7%. What is that? Well, that's the insane year-over-year growth in profit that Laurus Labs reported in one quarter. A number like that just makes your jaw drop, and it makes you ask a very simple question.
How in the world did they pull that off? Because, this wasn't some sudden stroke of luck, not even close. This was the result of a very deliberate, super high-stakes strategy that they put in motion almost a decade ago. This was anything but an overnight success. It was a promise that took 8 long years to prove.
To really understand how they got to this incredible payoff, we've got to jump in the time machine. We need to rewind the clock back to 2018. Back then, an investor basically laid out a theory for what this company could become. So, let's take a look at what Laurus Labs looked like back in the day.
Okay, so picture this. It's 2018, and Laurus Labs is a very, very different company. They were pouring tons of money into building for the future, but their actual business, it was almost entirely focused on one single area.
And this chart just says it all, doesn't it? A whopping 90% of their revenue came from something called APIs, which stands for Active Pharmaceutical Ingredients. Now, the big problem with being an API company is that you're basically selling a commodity. You get squeezed on price, your margins shrink. It's a tough business. Laurus saw the writing on the wall and was, well, betting the farm on these brand new businesses that, as you can see, were barely making any money at all.
So here was the big bet back in 2018. The company had already spent 600 crores, that's about $80 million on new facilities. Now, those brand new buildings were costing them a ton in fixed expenses every year, which was crushing their profits. The whole idea was, look, if we can just get these new businesses up and running and making money, all that new revenue will flow straight to the bottom line. Profits would just explode. It's a classic operating leverage play.
So, what were these new businesses they were betting on? Well, Laurus was making a very strategic move to climb up the pharma value chain. They didn't want to just sell the raw ingredients anymore. They wanted a bigger piece of the pie.
And this is a really simple way to think about it. Laurus was already an expert at making the API. Think of that as the pure flour for a cake. So they decided to start making the FDF, or finished dosage form. That's the actual pill you take, the fully baked and decorated cake. At the same time, they were scaling up their synthesis business, also called CDMO, which is like becoming a contract chef for other huge pharma companies, cooking up complex ingredients just for them.
Okay, time to jump back to the present and see how that big bet paid off. And spoiler alert, the results are just a dramatic flip of what we saw back in 2018. One of those new divisions in particular became an absolute powerhouse. Wow, just look at this. The old API business, now bundled with the finished pills, makes up about 69% of revenue. But the real star of the show, it's that contract chef business, the CDMO division. It has just exploded, going from about 7% of the business to almost 30%. That right there is the pivot in action.
And the crazy thing is, the growth is actually accelerating. In just the first half of the fiscal year, that CDMO business grew by a staggering 88% from the year before. This wasn't just a hopeful plan on a PowerPoint slide anymore. This was real. This was happening, all driven by actual commercial-scale deliveries to their clients around the world.
So let's connect all the dots, right? Let's bring it full circle. The incredible results we're seeing today are the direct fulfillment of that operating leverage bet they made all those years ago. The promise has finally become proof.
I mean, the transformation is just night and day when you put it side by side like this. Back in 2018, they were an API company with squeezed margins. Today, they're a diversified pharma company, and that high-value CDMO business is driving profitability through the roof, with gross margins hitting nearly 60%. That operating leverage finally kicked in, exactly like the 2018 theory said it would. And the people running the company see it too. The founder and CEO, Dr. Satyanarayana Chava, said it himself recently. He's basically saying, look, our strategy is working and we're going to keep delivering. It's not just a financial story. It's really the result of a clear, long-term vision finally coming to life.
But here's the kicker. They're not stopping. They're not just sitting back and enjoying the success. Now that they've proven their model works, Laurus Labs is doubling down. They're getting ready for their next massive phase of growth. They're making a whole new promise.
And the scale of this new promise is just immense. We're talking about an investment of around $600 million. That figure absolutely dwarfs their last big expansion. They're planning to spend that over the next 8 years to build a new, world-class pharmaceutical manufacturing complex.
So what are they spending all that cash on? Well, basically, the absolute cutting edge of medicine. We're talking really complex, high-value stuff here. Biotechnology, advanced cell and gene therapies, and these things called antibody-drug conjugates, or ADCs, which are essentially super-targeted smart bombs for treating diseases like cancer.
Which really brings us to the final question, doesn't it? This company spent 8 years turning a bold promise into undeniable proof. They completely transformed their business. So the question for the future is, can they take everything they've learned and do it all over again, but this time on an even bigger, more complex stage?